Okay, so a couple days ago I was talking about Paidoff with some friends, and they brought up this question of, why not get a Heloc at my local bank or credit union and do the exact same thing? Well, you're not going to be able to do that, so let me explain. Here's a screenshot from Bank of America, and you can see that they will borrow you up to 85% of the value of your home minus the amount that you owe. And that is the key point right there, the amount that you still owe. As an example, let's say your house is worth $500,000 and you still owe $400,000 on that home. The maximum Heloc they are going to give you is going to be $25,000. So you're not going to be able to walk in and say, hey, I'd like to swap out my 30-year mortgage for an 80% loan-to-value Heloc, just like Paidoff does. They're going to say, good luck. The most we're going to give you is $25,000. So that's point number one. Secondly, with Payoff, if you have 20% equity in your home, good credit, low debt to income ratio, and the required reserves, they will provide you with an 80% loan-to-value Heloc for up to $2 million. Now, the other difference between the two products is that with a traditional Heloc, you can only draw on it for up to 10 years and then they lock it. After that, you can no longer use those funds and all you can do is pay it back. With Paidoff, you have access for up to 30 years and they do it in a very unique way. So let me show you that. So you can see for the first 10 years you get full access to your credit line, and then after year 11 they start slowly decreasing it until in year 30 it's done. Now this is really key because when you're using Paidoff, you're going to be paying your home down super quick, and in most cases people can pay their home down in about 7 years. So that means that you have 3 years left of full credit to do whatever it is you want, whether it's investing in a business, maybe buying a rental property, whatever it is, you have access to that full line of credit, and then you have an additional 20 years of access to credit as well that's slowly getting reduced until year 30. You're not going to get this same opportunity with a standard Heloc. Now, the other point I'd like to bring up is the nightly sweep functionality, and this is what enables you to pay off your home so quickly with Paidoff. Every night, whatever money is in your checking account automatically gets swept over to pay down your Heloc. Now, you would be able to do this with a traditional Heloc, but it's going to be 100% manual, and because the two accounts are not tied together, it's not going to be instantaneous. So you're not going to be able to get the benefits of Paidoff paying your home down so quickly because you're going to have to do it on your own. It's going to be manual and it's going to be slow. Paidoff has also never frozen or reduced the funds of their clients' Heloc accounts since they've started in 2005. This is not true for major banks out there. We all know that during 2008 and even during the pandemic of 2020, major banks came out and either froze their clients' Heloc accounts or reduced the equity that they could pull from significantly. This is not going to happen with Paidoff. And lastly, you can apply Paidoff towards a primary home, a secondary home, and even investment properties. You're not going to be able to do this with a traditional Heloc as they're primarily for your primary residence. So you can see that with a traditional Heloc, you're not going to be able to get that 80% loan to value when you only have 20-30% equity in your home. You're also not going to get the sweep functionality, and you're not going to get 30 years access to your credit line. And you're always going to have to worry about your funds being frozen or reduced. So I hope what I've outlined here answers the question of why you can't go down to your bank and do the exact same thing. But if you have further questions, I've put the contact information of the Paidoff folks in the description below, and they can certainly help you out. As always, make sure you like and subscribe and follow me as I continue to pay my home down over the next 5 years.